Yeah, welcome to the Nifty daily view for 14 May 2015. Now the last chart that I sent was this, the possibility of inverted head and shoulder with support at 8120 to 8140. What Nifty did was bounced just around 8120 today morning, and then again there was some very big intraday volatility. So just let's see the chart of Nifty. So if you see this was on the low on that Nifty formed. It was around 8115 to 81616. So we expected Nifty to bounce from 8120 to 8140. It did bounce, but due to intraday volatility and what it after some analysis, it was the 61.8% retracement. Like if you see, this is 61.8 to 66% where Nifty bounced back. It again retraced from the 61.8%, or you can say the 66% retracement when it fell from the highs. So you can see the again 61.8% coming into play, and Nifty again made a lower low. So there was some intraday volatility today. So there is still a possibility of a inverted head and shoulder pattern. If you see, this is the daily chart. There's still a possibility of inverted head and shoulder pattern. So if you join the two lows here, there's a downward sloping neckline, and if we join, this is also a downward. So there is a possibility. So if Nifty, it will be confirmed only if Nifty crosses this two high of 8332 and 8355. So if this is crossed, then you can expect the larger channel in which we are trading, this two highs of 8600 to 8650 might be tested, and just after the confirmation of closing above 8350, we might test 8600 to 8650. If it fails to do that and makes another low of below 8089, then there are chances that we might drift to maybe 7850. So for that, it has to break this also low and the previous low here, and the possibility of inverted head and shoulder also will break. So there are two possibilities. For both the possibilities, you have to see the you have to wait for some confirmation, and we won't advise you to trade between this 8000 to 8350 range, because it is very volatile intraday. And for long-term charts, I wanted to show this weekly chart of Nifty. So if you see, if you join the two important lows of August 2013 and February 2014, which are very significant lows, the trend line on arithmetic scale, on log scale, it has already been broken. So on arithmetic normal scale, Nifty made a doji pattern this last week. So if you see, the high of this pattern is this candle is also 8355. The previous candle is also 8334. So it is very important for Nifty to break 8355 in these 2 days, Thursday and Friday, to confirm some kind of a medium term bottom here, or you might say a long term bottom also, if it closes above 8355. So that would be very important, and then there are chances that Nifty might test 8650. So this is the weekly chart. On monthly chart also, if you see, both these lows, the same lows of August 2013, it is forming a parallel channel. If you connect these two lines, so it is forming a parallel channel, and next few weeks will be very important. Why? Because it has taken support exactly at the trend line of the two important lows, and if we break this low, if you see in the left here, if you see this left window, the low is 7997 plus the previous similar low was 7961. So if this range is broken, you might be seeing much lower levels around 7500 that we have earlier shown in that Sensex chart in the previous video. So this low of 7997 is very important, and plus the formation of this reversal candlestick pattern is also very important. So next 2 weeks till this monthly candle is closed are very important. So the conclusion right now is there are two important points. So let's suppose 8355 on the upside needs to be crossed and preferably close for targets of 8600 to 8650, which is the falling upper end of the falling channel, green channel. And the next is if the 7997, the recent low, and 7965, the previous low, is broken, then the targets on the downside will be around 775 to 70. So basically 250 points confirmation would come if the range of this 88,000 or somewhere around those levels, this 7997, whatever the level was, 7997, and on the upside 8355 is broken. So watch out for these two levels, very important, and between this range avoid if you can to trade, because it is very volatile. So thank you.